We got a fresh read on inflation this week and new momentum in the markets. The Fed's favorite inflation gauge cooling to 2.8% year over year. Consumer confidence rising for the first time in 5 months. And private employers cut jobs in November by 32,000. How should investors position their portfolios ahead of a potential Fed rate cut on Wednesday? KKR balance sheet CIO Henry McVey joins me now. Henry, start me off with a big picture checkup on the U.S. economy. Do you like what you see now, and what are your thoughts for the year ahead?
I think we're going to be fine. Generally, we own probably 200 companies around the world with a big presence in the U.S. Our businesses are spending, they're hiring people, and they're growing. The savings rate in the U.S. has doubled, more than doubled since 2022. Nobody's talking about that. Productivity is strong, and I think the big, beautiful bill is going to lead to, we think, $200 billion of incremental CapEx spend, and you're also going to see some tax refund in the first quarter. So our outlook is probably that growth in the U.S. could be north of right about 2.5%. It's a very, very decent level, so I wouldn't look for an explosion, but I think this CapEx kind of revival is going to work.
Bordering on big and beautiful. Sounds pretty good. Where are you putting money to work right now? Start with the U.S. You were talking about capital heavy to capital light opportunities. What are those, and give us an example?
So look, I think a lot of the press is talking about, we haven't seen as big an M&A cycle. What we see at our approach at KKR is a huge boom in corporate repositioning. The big focus, Jack, is really around this idea of companies going from capital heavy to capital light. They want to make their balance sheets more efficient. I'll use a simple example, Harley Davidson, HOG, right? What do? They sell motorcycles, but they have a big receivables book. We were able to partner with them and to take some of that capital heavy off their balance sheet, and then we own that as a receivable or an asset at KKR in our credit funds. We've done that with PayPal. We've done that with Discover. Then on the equity side, a lot of companies are repositioning their portfolios by shedding underperforming assets. And we've done many deals, S&P Global, where we can help make these businesses better along the way. And the industrial space has been a great growth area for us around this capital heavy to capital light. It's a super exciting theme, and it's leading to a lot of upward revaluation of equities once we've been able to partner with these companies.
Harley's more into bikes than receivables, you're saying. Okay. And you're willing to take it off their hands. What about U.S. infrastructure? Are you bullish there? And how confident are you about the data center build out, the pace we're seeing there?
So look, KKR's got probably the dominant infrastructure business around the world. The U.S. is a big part of that. We've done a lot around energy infrastructure. We think that's going to be a great area of growth. I think we've been selectively bullish in the data center area. We are using, this, you don't want to be in the business of if they build it, they'll come. You want to be in the business of having strong counterparties with strong cash flow.
They're paying for it right now. Business.
Yeah, that's really where we have focused as a firm, and it's leading to outsized results there. But we've been doing that not only in the U.S., but in Europe, and then Asia for infrastructure has been a huge area of growth around data centers too.
You spent some time on the road this past fall. I've been reading your notes.
Thank you.
I gather that you're tempering your expectations for Europe, but you seem quite bullish on Asia, including Japan. Tell us about that.
So let's start. One, Europe is cheap, and I think there's money is going to flow in there, and I think the currency is going to appreciate. I think the Europeans need to do more in terms of what with the Draghi report, particularly around the securitization market. So to me, I'm tempering my expectations. I'd like them to move faster on the reforms. Asia, I think people should have more Asia in their portfolio. Most investors are globally underweight. We really like Japan. That's our second biggest market beyond the U.S. You can play that through the ETF market. What we found on the private side is we're doing a ton of corporate carve-outs. I mentioned that earlier around LBOs, companies that are going private. We're buying their underperforming subsidiaries, making them better. It's a huge growth area for KKR, and the returns for our investors have been really strong.
We've got about 30 seconds. Tell me about the biggest risk that you think investors maybe aren't paying enough attention to right now, and or the biggest opportunity for them here in the U.S. or abroad?
Look, I think the biggest opportunity is what I talked about, which is unlocking value in companies. This is going to be a market where we want to kind of make our own luck. The market's had 3 great years in a row, and from here you got to generate alpha, not beta. And I think doing that in ways where you're kind of moving up the quality curve and doing that through operational improvement is great. In terms of risk, it would be some change in monetary policy where the long end of the curve got unglued because of too much debt. That's not our base view, but governments today around the world, particularly in the developed markets, have a lot of debt on their balance sheets.
Okay, thank you, Henry McVey.